The stock price of Robinhood markets has only been available for about 5 weeks. But what a 5 weeks it's been. We've seen it trade as high as $84. And at the moment, we're pretty much half that. So where next for Robinhood? Are we going to see a similar surge, or is the risk that it slips below its IPO price? I thought it'd be interesting to take a look at Robinhood markets. If we flip this over to a daily chart, we don't exactly have a lot of data. It only came to the market on the 29th of July. It slipped the day after the IPO. Then we saw this incredible surge in early August that took it to $84. And here we are now, half of that, trading at $41.30 at the time of recording. So I thought, well, let's do an update. We've had earnings from Robinhood in August, a bit of a mixed bag of earnings. I'll talk about that in a second, talk about the levels to watch, then we'll come back onto the platform and take a look at what data we have in a bit more detail and see what the charts and the technicals could be telling us. Hello, I'm David Jones from Capital.com, and I thought we'd do an update this time round on Robinhood Markets, the online broker. It's only been publicly available as a share to trade since the end of July, so it's just over a month, 5 weeks or so. But what a 5 weeks it's been. So as usual in this video, talk a bit about the recent news. They've had earnings for the first time since they're a public company. Then we'll jump back onto the platform, take a look at the charts and the technicals in a bit more detail. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out lots of content on the different stocks that we look at throughout the week. Right, let's get into it and take a look at Robinhood in a bit more detail. So just as a reminder, it's an online broker. Robinhood Markets was founded back in 2013 and came to the market via IPO on the 29th of July this year, initially at $38 a share. It's proved very popular with retail traders and played a big part, I think, in the meme stock frenzy that we've seen this year, involving the likes of GameStop and AMC, where we saw the so-called short squeezes and big moves. And of course, the company was involved in some controversy around the time as it restricted trading in some of these stocks as volatility picked up. We've seen some high-profile investors buying in, for example, Cathie Wood, a name you may be familiar with, who runs, of course, the investment fund ARK. So that got a bit of press at the beginning. We did see the stock slightly weaker after that initial IPO, but then things changed. So in early August, we saw massive volatility for Robinhood Markets, just a few days after they initially floated. And within 2 days, if we look at the high reach, the stock price had more than doubled. So I think maybe there was an element of FOMO, fear of missing out, driving the price. However, I think if anybody got caught up in that frenzy near the top, they may be regretting it now, because since then we have seen the vast chunk of those very short-term gains given up by the stock and trading back near to where it was at IPO. We've had the first earnings from Robinhood Markets as a public company. They came out in August. And the company said that revenue had more than doubled in the second quarter. And interestingly, more than half of that revenue was down to cryptocurrency. But the company also warned that it expected a slowdown in trading activity, and that would affect revenues in the current quarter. So a fairly cautious outlook after, I think, perhaps much of the frenzy seen for the first 6 months of the year. I don't know how important profits or losses are at the early stages for companies like this, but the company reported a net loss of just over $500 million. But that wasn't really a surprise. The market, that was within the range of loss the market was expecting. I think what was of more concern to the market was the cautious outlook for the next quarter. So where next? We saw this massive frenzy in the stock not long after the IPO. We're bumping back down to post-IPO levels. Is it a buy down here? Could there be more weakness to come? Let's talk about the big levels to watch, then we'll jump onto the platform and take a look at the charts. So for me, the most immediate hurdle on the upside, we've got quite wide bands between these resistance levels, but that's because the volatility has been so high. So for me, the big hurdle, next big hurdle, is $50.70, the highs from the 25th of August. On the downside, lots of support coming in, $39.50, the most recent low, 8th of September low. And then after that, I think the really big level to watch just ahead of $33 for the stock. That was the lowest we've seen them trade since the IPO, so since they came to the market. But let's take a look at it. Let's take a look at the charts and see where the opportunities might be. As I always say, with these markets or stocks where we don't have much information, I think we've got to be a bit careful applying technical analysis to it because we really don't have the data. But let's work with the data that we have. I think, first of all, what's interesting is where we are now, where we've come from. The stock traded as high as above $84 the 4th of August. Following the IPO, it slipped down to 33. So I think it is interesting to see if we see some buying come in down at these levels. Now we're back down to where they were post-IPO. Let's switch this over to an hourly chart. So this is what we have at the moment. So we can see right on the left of the chart, the first couple of days of the IPO, then the stock really taking off. But since then, it's been in this decline. But I do wonder if we do see perhaps some stability coming back in to the stock. After the IPO, it slipped down to near $33. We can see it was sort of 33 to 40 was the range for the first few days following the IPO. So I do wonder, with the stock having slipped as low as around $39, just below 40 in recent trade, will we see a bit of stability down here? So I think it's an interesting one to watch. There's perhaps for the more patient, there's no urgency to do anything because we could definitely still argue the trend since that $84 high is still down. If you pick up on a trend line like that, that's from the highs immediately after it fell down. That trend is still down. And again, to keep a sense of perspective here, it's only been a couple of days since the stock slipped to a new low for that trend. I'm not saying it can't go surging away because, of course, we saw that back in early August. But I think it will be interesting. Do we have some stability down here? Do we see that trend line broken? So for me, if the stock started to trade through $44, then perhaps it starts to look as if this trend is finally over. So I think it's a really interesting one to watch in the weeks ahead to see if we get some stability coming back into the stock after the big sell-off we've seen from those early August highs where it surged out. So for me, this whole 33 to 40 area is a really interesting one to watch. I think if we start trading back below 40, I think that the risk is we could see a push down to the mid-30s and that level tested. We'll come back to it, do an update in the weeks and the months to come to see if it can crack this downtrend line. But for me, $44 on the upside is the level to watch. Let's see if we have a bit more normal trading for Robinhood markets from here. That's it for the update in Robinhood. Never a dull moment, it seems. We'll come back to it in the months ahead and see how it's performing, do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.